Welcome back to Explain the Charts, your definitive source for in-depth market analysis and strategic insights tailored for astute investors and traders navigating today's complex financial landscape. Today, August 8th, 2025, our analytical focus sharpens intensely on Microsoft, the pervasive tech titan trading under the ticker Microsoft, which has recently captivated the market with particularly compelling and volatile price dynamics. Initiating our comprehensive review with the broadest perspective, the daily chart for Microsoft, spanning meticulously from March 2024 right up to the very present moment. An unmistakable and remarkably consistent long-term uptrend immediately commands our detailed attention. The stock has not merely drifted upwards, but rather has meticulously carved out a definitive and resilient path characterized by a persistent series of progressively higher highs and robust higher lows, serving as a clear testament to its formidable underlying strength and unwavering investor confidence throughout this extensive 17-month period. This enduring and well-established upward trajectory not only forms a profoundly bullish foundational narrative for Microsoft, but also suggests a deep-seated and fundamental growth story that has consistently captivated global financial markets and technology enthusiasts alike for well over a year. The visual representation clearly shows a market consistently rewarding MSFT's performance over this extended timeframe. It's crucial to acknowledge this overarching trend as we dissect the more immediate movements. This long-term perspective provides context for understanding current fluctuations. To genuinely decode MSFT's intricate chart patterns and their future implications, it's absolutely imperative that we meticulously weave in the freshest news developments and the overarching market sentiment impacting the tech sector. Our most recent Google searches unveil an overwhelmingly optimistic consensus from Wall Street, with a formidable, moderate buy rating from 32 prominent financial firms and an ambitious average 12-month price target hovering impressively near $610, forecasting a substantial 16% upside from its current valuation. This pronounced bullish conviction is predominantly underpinned by recurring, highly positive reports highlighting Microsoft's exponentially soaring cloud and artificial intelligence revenues, consistently spotlighted by analysts as paramount catalysts for sustained future growth. Yet, the recent market action narrates a more immediate and stark reality. Microsoft concluded trading yesterday, August 7th, at $520.84. Following a noticeable weekly contraction that actually exceeded 6%, a sharp contrast to the analysts' optimism. This striking divergence, a robust long-term fundamental outlook dramatically juxtaposed against palpable short-term price fragility, presents a truly compelling analytical challenge for us to unravel. By precisely directing our analytical lens to the daily chart's performance during late April and early May 2025, particularly observing the exceptionally potent bullish engulfing candle that formed on May 1st, we pinpoint a dramatic and unequivocally decisive bullish reversal. This explosive price action, characterized by the stock rocketing from approximately $389 to $425 within a single trading session, directly mirrors the enthusiastic and widespread market response to the company's robust Q4 earnings announcement, which underscored booming corporate technology spending and rapidly expanding cloud services. The accompanying surge in trading volume during this pivotal breakout session further solidifies the authenticity and formidable power of this move, emphatically transforming a prior overhead resistance threshold into a newly established, highly formidable support level. Indeed, this specific moment proved absolutely instrumental in re-anchoring the stock's pronounced upward trajectory, laying a solid and reliable foundation for its subsequent and impressive multi-month climb towards new highs. This strong reaction clearly indicates the market's positive reception to Microsoft's financial performance at that time. The volume profile confirms that big players were stepping in to buy, supporting the upward momentum. It's a perfect example of fundamentals directly influencing price action. Building on that formidable momentum initiated by strong earnings, Microsoft embarked on a consistent and impressive rally throughout May and June of 2025, systematically surpassing and effectively converting prior significant resistance levels into dynamic new zones of support. A prominent and textbook example is the overhead resistance found around the $450 to $460 area, established from early June 2024 price action, which was definitively breached and subsequently acted as a resilient floor for minor pullbacks, illustrating classic technical analysis principles. By late June and early July, the stock ventured into unprecedented territory, confidently trading above the $490 threshold and then decisively conquering the psychologically significant $500 mark, signaling a period of peak investor optimism and market exuberance. However, the prevailing bullish narrative on the chart underwent a crucial and conspicuously abrupt transformation in late July. A sharp bearish reversal began to commence, unmistakably culminating in the highly impactful, large red candle observed on July 31st. Despite the initially positive market reception to the core earnings data, as reliably corroborated by news headlines extolling soaring AI revenues, the daily chart starkly depicts an open near $555, followed by a steep and unsettling intraday plunge to close significantly lower at $533.50. This potent and swift rejection from its very recent all-time highs strongly suggests immediate and aggressive profit-taking from early buyers and a subsequent, perhaps sober, reevaluation of the stock's valuation, potentially exacerbated by the intensifying market cap rivalry with NVIDIA as investors weighed opportunities. The notably high trading volume accompanying this dramatic down candle provides compelling validation for this swift and profound shift in market sentiment, unequivocally marking the precise inception of the stock's current, pronounced short-term downtrend. This kind of sharp reversal on high volume often indicates a change in the immediate supply-demand dynamics. It suggests that despite strong news, the market found an opportunity to reprice the asset. This is a key turning point that shifts our immediate bias from bullish to cautiously neutral or bearish. To fully contextualize the ferocity and suddenness of this recent bearish reversal, let's zoom in even closer to the 1-hour chart, meticulously honing in on the pivotal moments of July 30th and 31st that define this period. Observe the colossal hourly candle recorded precisely at 1900 hours Universal Time coordinated on July 30th, where Microsoft experienced an extraordinary and exhilarating surge, rocketing from approximately $510.59 to an intraday zenith nearing $556 in a breathtaking move. This almost instantaneous vertical ascent unmistakably exemplifies the market's initial euphoric and unbridled response to the stellar FQ4 earnings data, particularly the highly anticipated and much-lauded contributions from the cloud and AI segments. Yet, the subsequent hourly candles that followed dramatically contradict this initial burst of optimism, after touching an unparalleled peak close to $562. We immediately witnessed a rapid succession of pronounced bearish candles, indicative of aggressive and widespread selling pressure overwhelming the buying interest. By the time the daily trading session formally concluded on July 31st, a very substantial portion of that initial earnings-driven surge had been entirely obliterated, underscoring an immediate and sharp market reassessment of valuation and future prospects. This textbook, Buy the Rumor, Sell the News phenomenon, conspicuously coupled with remarkably high selling volume during the retreat, strongly implies significant institutional distribution actively occurring directly after the release of fundamentally positive news, as traders locked in gains. Such swift reversals on high volume are critical indicators of shifting sentiment, suggesting a top for the short term. They often trap late buyers, creating a pool of potential sellers on any future bounces. Understanding this rapid shift is key to avoiding significant losses around major news events. Shifting our analytical focus to the even more granular 15-minute chart now provides an unparalleled, finer resolution on MSFT's most recent price action, encompassing August 4th through yesterday, August 7th, allowing us to gauge immediate sentiment with precision. On August 4th, after some early, tentative consolidation hovering around the $528 mark, the stock briefly exhibited fleeting signs of life with an intraday rally, attempting to reclaim lost ground and peaking near $536.50, but crucially, it lacked the sustained momentum to hold these gains. August 5th unequivocally marked a decisive continuation of the prevailing short-term downtrend, as Microsoft broke down sharply from the $538 level, relentlessly grinding lower towards $528 by the close of that trading session. This relentless downward pressure notably intensified on August 6th, with the stock slicing through the crucial $525 support level with conviction, indicative of a pronounced and concerning erosion of short-term buying enthusiasm. Yesterday, August 7th, saw further, disheartening deterioration as Microsoft visibly struggled to establish any discernible floor, eventually concluding trading at $520.84, precisely corroborating the substantial negative weekly performance articulated in recent financial reports and news outlets. The continuous formation of lower highs and distinctly lower lows across this highly sensitive intraday timeframe emphatically confirms that the immediate price momentum remains profoundly bearish, undeniably dominating current short-term trading patterns and sentiment. This very recent price action suggests that despite the underlying, broadly acknowledged long-term analyst optimism, a considerable segment of current market participants are actively engaging in aggressive profit-taking or establishing new short positions into any fleeting strength, pushing prices lower. The consistent volume during these declines also points to continued selling pressure rather than mere absence of buyers. Traders looking for short-term opportunities should pay close attention to these intraday rejections of higher prices. This clearly shows the market's current struggle to find stable ground above $520. Returning once more to the comprehensive daily chart, our final objective is to meticulously identify and define the critical price levels that are poised to dictate MSFT's immediate and long-term trajectory in the foreseeable future. Immediate short-term support is critically positioned right around the $520 mark, correlating precisely with yesterday's closing price, rendering it an absolutely pivotal battleground for either a potential stabilizing rebound or a more pronounced breakdown today. A decisive breach of this $520 threshold, especially accompanied by elevated selling volume, could swiftly lead to challenging tests of the psychological $510 level and, subsequently, the more substantial $500 support zone, which has served as a critical psychological and technical barrier. Looking further down the chart, a profoundly robust and historically validated long-term support area, perfectly aligning with significant previous price action and the lower end of analyst targets, is firmly established around $475, offering a potential strong floor for deeper corrections should the current downtrend persist. Conversely, on the upside, Microsoft will initially confront formidable resistance at the recent points of failed recovery attempts, specifically clustering around the $525 to $530 range, where sellers have previously stepped in forcefully to cap advances. A more substantial and psychologically significant resistance, representing a major technical hurdle and the exact zone of initial earnings-driven exuberance, is located at the apex of the earnings spike highs, broadly ranging between $550 and $560. A definitive break and sustained hold above this $560 barrier, ideally on strong accompanying volume, would serve as a powerful and undeniable signal for a short-term bullish reversal, potentially clearing the path for a sustained rally towards the impressive $610 average analyst price target and possibly even higher towards the $675 high target. So, deriving from our meticulous multi-timeframe analysis, what precisely are the most compelling reasons to adopt either a bullish or a bearish stance on Microsoft, considering both immediate short-term and broader long-term investment horizons? And at what specific price points should one consider these biases? In the short term, The case for bearishness gains considerable traction if the $520 support is decisively broken, confirmed by heightened selling volume and a clear absence of buying interest, explicitly pointing to potential further downside towards the $475 level. Conversely, for long-term strategic investors, the intrinsic and unparalleled fundamental strength emanating from Microsoft's leading cloud and AI segments, its consistent and attractive dividend distributions, and the overwhelming analyst consensus collectively form a potent and enduring rationale for a strong bullish bias, positioning any significant dips as genuinely attractive buying opportunities for accumulating shares. The broader macroeconomic environment, particularly the ongoing speculation surrounding potential Federal Reserve interest rate cuts, could inject a significant and positive tailwind into growth stocks like Microsoft, serving as a crucial external catalyst to vigilantly monitor in the coming weeks and months, influencing broader market sentiment. When contemplating actual trading entry and exit points, always prioritize seeking robust technical confirmation. For initiating long positions, meticulously search for clear bullish reversal candle patterns, such as a hammer or a bullish engulfing, ideally coupled with a noticeable and sustained increase in buying volume at established support levels, providing high-probability entry signals. Conversely, for identifying attractive shorting opportunities, vigilantly observe definitive bearish patterns like evening stars or bearish engulfing candles forming at resistance, strongly confirmed by escalating selling volume, indicating that supply is clearly overwhelming demand at those price points. Furthermore, always underscore the paramount importance of disciplined risk management by diligently setting appropriate stop losses strategically aligned with these identified key price levels, especially amidst periods of heightened volatility where rapid and unexpected price swings are common and can quickly erode capital. In essence, while Microsoft is currently navigating a period of acute short-term bearish pressure, predominantly fueled by post-earnings profit-taking and necessary technical consolidation after a strong preceding rally, its formidable underlying fundamental pillars strongly suggest a high probability of eventually resuming its robust long-term bullish trend and achieving significantly higher valuations over time. To emphatically reiterate the most critical price levels for traders and investors to diligently watch, immediate support is at $520, followed by subsequent significant levels at $510, $500, and the crucial long-term anchor at $475, marking potential bounce zones. Key resistance levels that need to be overcome are located at $530, and the more formidable psychological and technical barrier resides within the $550 to $560 range, which will require substantial buying power to breach definitively. A sustained and convincing move beyond $530 is absolutely indispensable for initiating a reliable short-term recovery, whereas a decisive and high-volume breach above $560 would unequivocally reinforce the long-term bullish continuation, paving the way towards those ambitious analyst price targets above $600. Conversely, a pronounced and high-volume break below $520 would unequivocally open the door for deeper price tests and further downside pressure, necessitating a prompt reevaluation of any short-term bullish strategies and potentially favoring short positions. Thank you for joining us for this meticulously detailed analysis on Explain the Charts. We sincerely encourage all our discerning viewers to like this video, subscribe to our channel for more invaluable market insights, and activate that notification bell so you're always ahead of the curve and never miss an update.